Can I ask you about your investment plans, Sven? You've recently made some big commitments to factories in Germany and Malaysia, so a focus on the investment there. Also, a joint venture over in Saxony with TSMC. You're ramping up this expansion at a time where some of your segments might face challenges. How do you make sure you're investing enough but not too much?
Yeah, that's a great question. First of all, let us step back a bit. When we announced our Villach 300 millimeter silicon investment 5 years ago, there were concerns about market timing. There were concerns about the location. There were concerns about the sizing. In hindsight, now everybody says, why not earlier? Why not bigger? So you can, in the semiconductor industry, you cannot fine-tune the ramp of investments 100% to short-term market dynamics. For us, it's very important that structurally, Infineon's growth is based on 5 mega trends. It's e-mobility, it's autonomous driving, it's renewables, it's IoT, data centers, and that's where we see the big growth going forward. So even if there are a couple of weaker quarters, that does not put our investment plans into question. And the ones you were referring to are 3 distinct plans. I will very quickly go through on the timeline. The first one was the announcement of our Dresden fab, which is a smart power analog mixed signal fab, very much of importance to European industrial automotive customers. The second one in Malaysia is a silicon carbide based fab, very important for the significant growth of silicon carbide in the future. Just to show that we had the growth of 65% in silicon carbide last year. This year, another 50% expected. And the last one is the TSMC joint venture. We're very pleased that TSMC is coming to Europe, and we decided to partner with Bosch, with NXP, with TSMC. So we will have a stake of 10% in a very important other dimension of CMOS and FinFET technology, 12 to 28 nanometers. Again, very important for European automotive and industrial customers.
Sven, I want to go back to the top of the conversation and this divergence that you illustrated between the autos part of the business, the demand coming through there, and the consumer part of the business. And you were pretty frank with us. You said, look, it's going to be extended softness in terms of the consumer demand. You do see that picking up in the second half of the year. And you said, look, the timing is going to be tricky on that. What is underpinning that softness? Is it the macro environment? And what is going to turn it around for you?
Yeah, it is definitely a combination of different factors. It's the macro environment, it's the increasing interest rates, it's the fear of inflation, although we have seen that at least in some territories it seems to come down nicely. It's also, to be fair, and I think here we are not alone, many of the semiconductor companies got the China story wrong, in a sense that we thought once COVID restrictions are over, the consumers will go back and go to consumption. I think we have now seen that this did not happen as much as we hoped, and therefore there is a delay. So these are a couple of things, but as I said, the structural consumer growth, be it in IoT, be it in data centers, it will come. It's just a question of timing. So we are not concerned about it in absolute terms. It's just a push out.